Okie doke, let's get back into it. We have a new week, and I took one trade today, but I closed it very, very early at break even pretty much on gold. And other than that, no trades on the S&P or the NASDAQ. Um, Pretty much the model just didn't form, price just moved away too quickly at the market open and just continued to rip. So we didn't get any break and retest on the NASDAQ or the S&P, as you can see here. But what we will do is we'll go into the trade that I marked out on gold. I was looking for a previous daily low to previous daily high model, and why I was looking for it. We'll get into the details. So, pretty much, what I know from this model is when price comes into a higher time frame point of interest, it tends to retrace and then come back into it. To then fill it, as you can see here, we've got daily fair value gap, and then I think this is a weekly gap here. So I was just gradually waiting for price to come down to this green level here, the higher time frame point of interest, and see if there was a reaction off it. However, looking at the 4-hour chart now, this reaction candle did not close above the previous candle and did not break structure. And even if it did, it would have closed within this higher time frame bearish fair value gap. So, this was one of the things that sort of played a part into my decision to close. Another reason being there was a reaction off the Asia high from the previous day at 7:25, and I was in quite early this morning. 7:25, as you can see, it's before the AM session, and it's just in between the London session and the New York AM. So in terms of volatility, it wasn't great, but I just went with what the setup was. I was conscious that if we look at targeting the previous daily high, this is probably unlikely. 450 with the previous daily low at 4687. I don't think that is going to cover like $900 per troy ounce within a day. So yeah, I took that into consideration, and I was looking at the PM high being a target, and then maybe what else was the other one? Yesterday's I'm not even sure what this was. I think it was just like to get the risk to reward up, because the original stop was like here, so it would have been like 3-1, and then I sort of trimmed it a bit. But yeah, we'll drag this out just for ease of looking at it. So in terms of why I went long here, as I've just explained, previous daily low to previous daily high model entry criteria, and yeah, just looking at this candle here, it just seemed like it didn't really need to go lower. And yeah, I was happy for that entry to become a possibility. And then, yeah, so if we get into it, we've got the inverse fair value gap just before the London session. And then from there, that's on the 15-minute time frame. And then if we go on to the 30-minute, we got this breaker structure here. And then from that, we get a quick retracement here, and then a push up, creating the fair value gap, which would act as an entry. And yeah, because of the time of the day that it was happening, and obviously all these other bearish confluences, I was a bit more cautious. Also, it's Monday, and also it's gold. So I'm aware that gold can be quite prone to reversing and just baiting people out. So I just wanted to wait a little bit. So in terms of my entry time, if we go on to 1 minute, when was it? Let's look at my broker statement real quick. 7:11:36. So entry time, no, it's what? So it's here. I entered off these candles here. So it was basically price tapped the fair value gap, traded up, tapped it again, and then we saw these candles here, and then I entered on this pullback on the 1 minute. I think on the 3 minute it might be a bit clearer to see that. Let's have a look. Yeah, so it's about here, which doesn't seem right if I'm looking at my broker statement. But yeah, I think due to spread I was putting up here, so it must have been a bit later because it's not matching my broker statement. It was around here. Basically, my entry was just hovering below the Asia high, and yeah. So I also noted, obviously, in terms of reversal or rejection zones, we had the Asia high, so that is a draw on liquidity, and I was aware of that, and my entry was quite close to that. So I was just a bit more cautious. I had my stop loss just below the previous daily low with a bit of space underneath this fair value gap on the 5 minute. And I did it was literally very, very small entry, 0.01 lots. So, 70 quid to make 233 for 3.39 to 1. So, yeah, let's just get back into there. So we also had this fair value gap on the 5 minute, and I've drawn that from the bottom of this wick here, and this gap here, and as you can see, price traded pretty much perfectly into that. And then with these candles coming down, that was when I made the decision to close, just because I did have the inclination I was a bit early. And as you can see, price trades down into the fair value gap on the 5 minute, pulls back up to the entry point, and then we would have got stopped out there. So break even slash early close, it was £1.55 profit. Very, very, very break even today. So no complaints. It's fairly standard. Could have been worse. But yeah, I was just targeting this high here, and then the PM high, because that aligned with this fair value gap on the daily chart. And yeah, I mean, I was considering just trimming it to this, so it would have been a 1.78 to 1. But ultimately, this would have been my break-even point here. So yeah, that's pretty much that trade. As you can see, since then we go on let's go on a 30-minute chart. Price has been very reluctant to come above that level and just sort of traded back through the fair value gap down into the higher time frame point of interest, which I think, where was it? Yeah, it's just sort of held above here. I wouldn't be surprised if we see it come down a bit lower, or maybe a reaction off this. It all depends. So yeah, just very, very low liquidity in the market today. I think after a big drop like that, people are a bit uncertain and don't really want to touch it as much. Similar with silver today, you can see it's the same sort of reaction. Price has come all the way down to where I had initially closed over here. So yeah, we missed out on these profits, but in a matter of days, it's come straight back down to where we took take profit. So it gave me a bit more comfort in my decision to close at that point, because I didn't really know how high silver was going to go. Is in price discovery, and yeah, it's just very high risk when it happens. And then you start getting a lot of retail noise. Once the retail noise comes in, then it becomes a bit more high risk, and you sort of don't want to be involved at that point. But yeah, so that's my gold trade, my silver outlook. From there, let's get into what I was looking at on the NASDAQ and what I was looking at on the S&P. So we'll start with the NASDAQ. This isn't a break and retest or anything. This is just like there's a lot of orders sitting around this level, and I just marked that out just because that's where we saw price have a reaction from, and I was thinking, maybe it could come and sweep that. But as you can see, price is absolutely ripped today after the big sell-off. So yeah, it was fairly straightforward. I was comparing the two charts, the S&P and the Nasdaq, marked out the 8 o'clock 15-minute candle on both. I was looking more at the S&P, although I do note that we had these lows here just before the session, where you can't really see it as well, but on the Nasdaq, price didn't come and take this low, whereas on the S&P, you can see it just swept this, and then we saw the move up. And yeah, so pretty much, what did we have? I was looking for the break and retest. Price was holding just below this this high here, which I marked out, and as you can see, the bodies of the candles are all closing. And the reason I didn't take the entry was because, we already hit the midpoint from that candle, noting that we also have a doji candle. I think more on the Nasdaq. Yeah, a bit more on the Nasdaq, where, it's a bit uncertain as to which way price is going to go. And yeah, pretty much just marked out similar highs. You can see we've got an imbalance here. We've got this high here on the Nasdaq. Same on the S&P. We've got, I think that was a 5-minute fair value gap. Yeah, what was that? 30-minute? Not actually sure which time frame that was on. Was that on the 3-minute or the 1 hour? Maybe the 1 hour. No, it was the 3-minute. So yeah, so that's what that is. And obviously we've got previous daily high as well. So I was literally looking for just the tiniest move, just a 3-to-1 off a retracement to the midpoint. And as you can see, I wrote in my notes, this was probably at like 928, 929, just because price hadn't come down yet. And it's sort of just broken away since 8 o'clock. Being price moves upwards first at open, I'm not trading long and I'm not taking a trade. It's invalidated my setup. And as you can see, if we go on the 5-minute, literally straight from the open, price bounces up, respects this 3-minute fair value gap, sits on top of it, and then pushes up from there. So there was no opportunity to get in. This would have been the position that I would have marked out. Similar story on the Nasdaq. No opportunity to get in, straight move up. I was looking at potential rejection from this high, see how the candles would hold below it, because then we could potentially short back down to the midpoint or for a 3-to-1 from there, which I've got in my notes. Or alternatively, if price broke below this zone, maybe a retracement from the midpoint to go short. But yeah, ultimately we just didn't get a setup today, so we didn't take a trade. So pretty straightforward. I would have been out very, very early, would have missed quite a majority of the move, considering it went straight up to previous daily high by 10 o'clock, at which point we had positive news. I think we had ISM manufacturing PMI, which was better than forecast, which is, what is it, levels of diffusion index based on survey and purchasing managers. And the manufacturing industry above 50 indicates industry expansion, below indicates contraction. So industry expansion in manufacturing equals a continued run up at this point, apparently. So yeah, we had this big fair value gap on the higher time frame. We got this sweeper liquidity, so we can just draw this here. Got this sweeper liquidity. like so. Just pop a little, okay, I guess not. So you can just do like one. So we've got internal taken, we've got external taken. It's pretty much eyeing up to be bullish. So my bias was correct on this. But yeah, like I say, there just wasn't a retracement back to the midpoint for an entry. So yeah, ultimately that is Monday. You can see prices almost come up to the previous daily high here, which I'm a bit surprised because due to the SMT where on the Nasdaq it didn't sweep the low, but on the S&P it did sweep the low from the 8 o'clock candle. I was expecting the Nasdaq to be, more of the bullish market rather than the S&P, which doesn't seem to be the case. So that is something to note and take forward going into the rest of the month and just for the future. Whereas usually, if one market does one thing, the other market doesn't need to do it, and then the other market in turn would be more bullish or bearish dependent on whether or not it swept the high or the low, or in this case didn't sweep. But you can see we've just taken Friday's AM high. Lots of orders sitting around here, so that's another point to note as well. So yeah, it just goes to show there's a lot of orders here, there's a lot of orders down here, and today the buyers took hold. Yeah, I think that's about it. We end the day what, £1.55 profit, so it's pretty much nothing. But I did trust my gut and closed out here, and I was correct. So it could have been a £68 loss today, and as I mentioned in my month-end review yesterday, it's about how much are you losing when you get stopped out? How are you minimizing your drawdowns, your average drawdown? And today I managed my risk accordingly, especially because it was gold, and because of the time I entered. So, and because I don't have as much data trading gold, but it is something that I'm gradually looking to add in as just testing. Whereas I'm a bit more comfortable in the Nasdaq and the S&P, like more comfortable in terms of the price action, how it moves, rather than gold. Whereas I just know on gold, price is a bit less predictable and maybe has a higher probability of doing the opposite thing to what you'd expect before then going in the correct direction. So yeah, just one of those today. Nothing too crazy. I think that's everything for now. We'll just go into news for tomorrow. As I did notice when I refreshed the page, we do now have this little banner saying US government data may be impacted by the shutdown, tentative events subject to delay, revision, or cancellation, which we have seen before in the previous government shutdown. So you can see here, USD job openings, tentative. What else we got? Non-farm employment change is fine. Tentative on employment claims. So that will tie back into the different departments that we looked at yesterday that would be affected by this government shutdown. As you can see here, JOLTS job openings is affected. So just little things to keep in mind. I'm thinking tomorrow maybe we could see a nice trade, or if not tomorrow, Wednesday's a bit, don't know. Thursday maybe could be nice. We got red folder, consumer sentiment and inflation expectations, which previous, why is that green? That's what I need to know. Why is that green? Previous actual January 9th. Oh, so I think that is the previous release beat expectations. So it's forecast to be not as good. Actuals greater than forecast. Level of composite index based on surveyed consumers. Okay. But yeah, so overall, lots to take in today. Nice bit of tape reading, exercising discretion with my management, and also exercising discipline when the model doesn't play out, and just sitting on my hands. Sometimes the market's going to run and not give you an opportunity to get in. I know there'll be a few people that did take a trade today, just based off the overall structure here. It's fairly bullish. We've got 1, 2, 3, 4 highs, 4 draws on liquidity there, plus the previous daily high. Same again for the S&P. 1, 2, 3, 4 draws. The S&P low in London, in the New York lunch hour on Friday was a bit lower than the 2 a.m. and p.m. sessions, so that's not so much of a factor. Plus this one here and here. So there was, now I'm looking back at it, there was undeniably quite a lot of evidence that price was bullish. And also on the higher time frame, we've got this high up here, which I'll just drag that down so it matches a bit. So yeah, I mean, we just have to see what the market brings for the rest of the week. Obviously no rush going into the start of the month, and yeah, we'll just remain patient, trade the plan, and continue to do what we do. With all that being said, I'll catch you in a bit, and yeah, trade safe. Nice one.